silver is where gold was, 18 months ago or however
Right.
long ago before it started to make its move. And on a technical level, this long building, 45-year cup and handle base building, it's right at the mouth of the cup, about ready to break through, and it's right, breaking through that resistance as we speak. So if we can get past the close of this month above 36, I think the sky's the limit. Um, I think any discussion about gold and silver without talking about the BRICS now is a mistake. And a lot of people would say, well, the BRICS is old news. I want to get to that later on because I think that there are some developments, Danny, that have happened within the BRICS framework that I haven't heard anyone talking about but me, about one thing that changes everything. I want to come back to that. I think the thing that I've been focusing on the most, really all year, has been the amount of gold that's been coming in to the United States. Now, we know that countries like China have been buying gold. In fact, they expanded their gold reserves for the 7th straight month in May. But that's happening all around the world. And that's something that should certainly not be ignored. But what's happening here in the United States? And when I mention gold, I mean silver too, which, by the way, is up over 45% year to date, which is outpacing everything in the metals complex. But when we talk about gold, to see the amount of deliveries coming into COMEX, and really no one knows who is behind it, is something that I think needs to be really contemplated in the respect that, as an example, the May gold contract and silver contract, the May gold and silver contract were the largest deliveries into the COMEX market in history. And this is just kind of a repeat, if you will, of everything that we've seen since really November, where month over month over month over month, we continue to see huge inflows into the COMEX market. Now, this is ridiculously different than anything that I've ever seen in this industry, ever. This never happened before in this industry. As a result of futures contracts normally settling for cash, now all of a sudden you're seeing these futures contracts settle in for delivery. And that's something that, 8.5 billion, if I'm not mistaken, in gold was delivered into the May contract. Now these are things that, forever you would see maybe 1% of contracts stand for delivery. Not the sheer amount that we've been seeing, which is off the charts, and it's continuing. We've had somewhere north of 35 tons of gold stand for delivery since Easter of this year. And I think what we're really seeing is that private wealth is moving towards assets like gold and silver with no counterparty risk, and that's why they are standing for delivery. To me, that's the biggest thing, Danny, is that we're seeing a global rush, whether it be bleeding dry, the LBMA, to where they have to go to 8-week delivery delay from T+1, T being the trade day plus 1 settlement, the third day your metal should be moving, to T+8 weeks. A draining of the Shanghai exchange, where Chinese are promoting their citizens and prodding and encouraging them to accumulate gold and silver through state-sponsored gold and silver projects. So they are actually pulling it out of the Shanghai exchange, or the same thing happening on COMEX at a much bigger level, or the biggest money in the world, the most sophisticated money in the world, the most well-informed money in the world is standing for delivery. Now you can look at what President Trump said on Easter Sunday, a tweet on Truth Social and on Twitter, where he says, the golden art of negotiating, he who has the gold makes the rules. Thank you, whatever that means. You can point to Treasury Secretary Bessent, who said, look, there'll be a new Bretton Woods, a new monetary system within this administration. And of course, you can point to Judy Shelton, who on my interview said that she was told by Trump, and many people think she'll take over to run the Federal Reserve when Powell's tenure is up in the next few months, that she was told by Trump that he would issue gold-backed treasuries, 50-year duration to begin with, on July 4th, 2026, which would be the 250th year anniversary of the country. But look, it's not just gold. We've seen somewhere in the neighborhood of 12,000 silver contracts stand for delivery just recently. And so we're talking, and you multiply those by 5,000 ounces. So I guess to me, the thing that really sticks out, Danny, more than anything is delivery into the ecosystem. And the people who are doing this are not just the most well-informed, they're the most or the well-funded, they're the most well-informed. And people at these levels do not do this kind of stuff, do not spend this kind of money, where in March it was almost 5 billion, 4.5 billion for a client from JP Morgan. In May, the largest deliveries ever. This has been going on since November. Who's bringing all this in? Who's standing for delivery? And what do they know that we don't? Now, of course, the price keeps moving higher. You find that these players make these moves prior to the price moving, using the suppression of the COMEX market and the LBMA to their advantage. And there are those that think, like Eric Young, the King Kong on X, who believes the Chinese are doing the same thing with silver, shorting the paper price in New York and buying physical in non-price setting locations around the world to accumulate it at subsidized prices. They're playing the game, a long game, to drain the shelves. And I guess what I would say is that when players at that level stand for delivery to the degree that they have, there's something much bigger at foot than any analyzing would ever tell you. It's just simply these people don't make these kind of moves in a preemptive fashion without knowing what's coming or having a very good idea of where things ultimately go. And we're talking something's going on. And silver is now, this is the third time in history it's been this high, which is kind of crazy if you think about it. And when we get through this resistance in the mid 40 range, there's nothing standing in front of it. And I guess Vince Lancy made a great point, and he said, silver is where gold was, 18 months ago or however long ago before it started to make its move. And on a technical level, this long building, 45-year cup and handle base building, it's right at the mouth of the cup, about ready to break through, and it's right, breaking through that resistance as we speak. So, yeah, I think it's the action in the metals market that to me, along with deliveries, that is something that I pay real close attention to. This stuff doesn't happen just for the hell of it. And if you look at what's happening in China right now, by the way, silver closed yesterday at 38.29. This is the arbitrage that the Chinese and the Shanghai exchange are using to entice anyone stupid enough in the West to sell our silver at a much higher price. But at 38.29 in Shanghai, they've been leading the price. In other words, we've been seeing this higher price level in Shanghai, and the metal keeps moving in that direction. So to say we're very close to this breakout phase, look, you get up into the $38, $39 range, there's very little ahead of it other than a couple of brief examples in 2011 and 1980 to act as support, as resistance. So yeah, I'm very bullish, very, very bullish on silver. But when we see the largest delivery in the May contract of ever in silver and gold, but in silver, I think people should pay very, very close attention. That technical analysis is very important for sure on this long-term cup and handle formation. But I think right now we're moving into a different era, where, access to things like your wealth has greater significance perhaps than return on. It's more like return of. And in a world of counterparty risk accentuating and growing and systemic risk, there's a drive by some very sophisticated players for sure to stand for delivery. And that's what's different than ever before, Danny, is that it's easier to manipulate the market when no one stands for delivery. When people stand for delivery, and it's a very difficult thing to do, especially in those levels, it's sophisticated, it's expensive, things start to get very different. And it represents a really systemic threat, if you will, to many of these shorts, the commercial banks who are foolish enough to continue to short the market. So yeah, it should be an interesting If we can get past the close of this month above 36, I think the sky's the limit. We'll see if they try to hammer it down again, as they always have. If we can get past the close of this month above 36, I think the sky's the limit. We'll see if they try to hammer it down again, as they always have. We continue to hear that their numbers that they're accumulating are 10 times less than what they say, but they kept their numbers at 1,200 metric tons for I don't know how many years. When I was in this industry way back when, I've been doing this for 35 years. For half of my career, people would say the numbers are a lie. They never increase. They're the largest producers of it in the world, and yet their numbers are barely increasing. Why would they want to let anyone know? Why did we catch Saudi Arabia doing the same thing, importing gold and silver, or gold in particular, that they didn't report to the IMF as they were supposed to? Oh, sorry, it was a mistake. Why haven't we audited our stockpile? I think it is a strategic reserve, and the central banks understand that. That's why no one is very transparent about it. It wouldn't do them any good. And you're right. In a world where information, just like that, crosses the globe, to tell the world this is what we're doing would be the silliest thing you've ever done. So using the art of war or the art of misdirection, yeah, I mean, to your point, I'm not saying it is, but it would make sense. And yet the central banks are the biggest accumulators of it in the world. And yet the media, the Western media, doesn't tell you about it at all. You think that that's obvious, right? We've been talking about it forever in this industry, and the people listening to you get that. But take a step outside of this universe and go talk to anyone and say, do you think that silver's up 43% this year? No one would have a clue. Do you think that gold and silver have been accumulated by the central banks for all of these? No one would have a clue. So you're right. That would be the last thing to do. But many people would understand that, the talk of Bitcoin and it being used as a in the capacity as some sort of a sovereign fund. There's more and more talk of it, even mainstream. Look at Senator Lummis from where is she from? From Wyoming, who publicly said at the Bitcoin conference that Trump should revalue gold, which ironically it's held in what's called the gold revaluation account. And he should revalue gold in order to take some of those proceeds and buy a strategic Bitcoin reserve. So yeah, I think it is perhaps somewhat of a red herring, and I'm not speaking poorly about it. I'm just simply saying that there's vast evidence that the central banks are massively accumulating it. And one of the things that I find very interesting is that we've seen over 40 nations repatriate their gold from the Bank of England and the New York Federal Reserve over this time frame, where these were the hubs that gave direct access to the LBMA in London and to the COMEX in New York. So you leave it at the New York Fed, you leave it at the Bank of England, because these are Western, jurisdiction of law, safe and stable institutions. Well, it's gotten to the point where not so fast. Perhaps we would rather have it in our possession. And the same thing is true, I think, on a broader scale of why we're not seeing any Treasury, net new Treasury issuance since 2014. Yeah, central banks are buying it, but we're supposed to believe that the Cayman Islands is number 3 or 4, spending the majority of their national budget, or like at least 15-20% of their country's budget, on our U.S. Treasuries. At the same time, Great Britain has taken over number 2 from China, as China continually is selling at a controlled manner and replacing it with commodities. So here we have the largest debtor nation on the planet, the United States, whose main number 2 behind Japan, holder of our treasuries is another massive bankrupt country in the United Kingdom. It's 2 drunk guys holding each other up. It's silly, and at the same time, the rest of the world is shedding our debt and buying tangible items, gold and silver and platinum and copper. Look at platinum. Platinum is on a tear too, and that's because the big money is accumulating platinum. We're going to have a 1 million ounce supply deficit in platinum again, and this is going on now for, I don't know, at least the second year in a row. It's expected to have deficits as far as the eye can see moving forward. The majority of the platinum is sourced from South Africa and Zimbabwe combined, about 80% of it just from those 2 countries. And last week in New York, platinum was in backwardation, meaning that the cash price is higher than the active futures, signaling a shortage in the physical market. Well, if we go back and look at open interest futures, if we go back to June 6th, it was the highest volume ever. But if you look at what's going on COMEX right now, you have an open interest contract claims for 4.8 million ounces, but there's only 353,000 ounces of platinum in the vaults. This is the problem that is being exposed. It's in London too with silver. 280 or 90 million ounces that are not spoken for in silver. The rest of the silver holdings in London are held by the ETFs, of trading against as much as 2.9 billion ounces in paper contracts per day. That's 10 times the float and 3.5 times annual global mine supply. So what we are seeing is that the big money is accumulating the physical because of this, but they are using this distortion in prices because of the futures, most of it naked, in order to accumulate it and stand for delivery. And that is one of the most important things to understand. You know, I think we saw a China import, I want to say 8 million ounces of platinum recently. They only produce 1 or 2 million. So again, countries are shedding treasuries. Not only are they poorly performing over the last few years, but they have counterparty risk in terms of sanction risk and confiscation risk and also inflation risk. And they're replacing it with things that they can hold in their own hands, like physical metal. And it's not just gold and silver. It's platinum, it's copper, it's any of the base metals. This is probably why the Chinese bought the London Metals Exchange, which is the base metal exchange. They're playing the long game and they're siphoning everything away, just like silver right now is priced so much higher at almost $39 an ounce in Shanghai, because they are incentivizing the West at using the stupidity of our Western paper pricing system to ship us off everything that we would rather make a quick buck on rather than see the big picture. And that's why Eric Young, King Kong on Twitter says, hold on to your silver. The Chinese are playing the long game. They are accumulating using the subsidized price, everything they can. This is why Sean Kun from Dolly Varden will tell you, if you ask him, that they're flying, Chinese are flying all around Latin America, in particular Peru, and buying up all the doré and the concentrate directly from the miners, disintermediating the market, disintermediating the pricing mechanism, shipping it all the way back home to China to refine it, so that the market has no idea. Now, they're the second largest producer of silver in the world. Mm-hmm. If they're the second largest freaking producer, why are they flying all around the world buying unrefined doré bars and concentrate from the miners instead of buying it right off the market? Because that way it's opaque. No one really knows how much they're buying, how much they're bringing home, and it doesn't affect the price. They play the long game. We think in terms of minutes in this country. They think in terms of millennia. And that's why in the end they will win the game. And that's why, you get guys that are talking about China moving to the epicenter of the financial universe in the coming years, because they're playing the long game to strengthen their economy, to strengthen their country. That will very quickly, I think, be realized. But by that point, so much of it will have already been sent over there. It's too hard to do anything about it. And maybe that's what the Trump administration, hopefully, God willing, has told President Trump, is that we're in trouble. We need to start bringing this stuff home. And maybe that's why we're seeing the largest influx deliveries into COMEX that we've ever seen, ever, over the last several months.